Good morning. I'm Vince Lancy. This is the Gold Fix Market Rundown. For Tuesday, it's 8:05. Things are happening a lot faster now. There is a story from last night, a breaking story. Well, we're breaking it now in the West for everyone. From Hong Kong, the BRICS and China have completed the gold supply chain they've been threatening to complete, signaling that the infrastructure, payment rails, and collateral system for a gold-anchored global market are now operational. And they will be launching, they've been testing it. They'll be launching it formally in 2026. That's the story in the lower left-hand side. Before we get to that, let's look at the markets. 10-year yields are down 1. The dollar is down 29. The S&P 500 is down almost 4. The NASDAQ is down 37. The VIX is unchanged bid. Gold is up $46 at 44.90. Silver is up 72 cents at 69.76, give or take. Copper is up 7 cents, starting to participate. WTI is up 21 at 58.31. Natural gas is 387, up 11. Bitcoin nowhere lower, down 850. Ethereum lower. Palladium up 27. Platinum up 61. Platinum's the boss. It's about time, right? Gold, silver 64.33, unchanged, moving in tandem. Grains are all up, with corn taking the gold, as it were. Okay, there's the homepage again. Top right-hand side is a breakdown of yesterday's PM behavior, a recap, and it features some commentary about platinum as well as silver. Hong Kong has taken another decisive step toward becoming a gold hub for the world, accelerating plans for trading, storage, clearing, and risk management as BRICS' long-developing gold infrastructure moves from concept to execution. This marks the latest chapter in a story that we have been cataloging for years, from China's vault expansion and gold payment rails to the quiet build-out of collateral and settlement systems across the East. With supply chains now complete and clearing frameworks taking shape, gold is no longer theoretical as a global collateral anchor. It is operational, visible, and increasingly central to the next phase of the international monetary system. A return to sanity is how we would call it. We have been covering this for about 3 years, and the coverage was to show the opening up of a secular change in perception from a fiat money era to a hard money era, from a West dominated to a shared multipolarity, mercantilism as a manifestation of that, deglobalization, de-dollarization. And the stories that we gave then were for our fellow gold bugs to have something to buffer them against the bullshit that's been going on for decades. These were real material steps being taken. You see it unfolding. And every time we and readers had moments where, oh my God, this is it, it's over, like tape watching, the story remained the same. And in a sense, the more we ignore the Western coverage of stories on gold, the more we watch what China is doing and the BRICS are doing, we see that as gold people, as hard money people, that the world is becoming a stacker's world. And that's happening in every way, shape, or form. The reason I bring that up is because now the world's going to start catching up little by little, dribs and drabs, fits and starts, no matter how you look at it. And there is a temptation, speaking for myself, as a healthy skeptic who starts to see news stories, oh, this might be the top, everyone's catching on. No. You've been so far ahead of the curve. no one knew what we knew. And I mean collectively, the gold community, the silver community, it's not about us, although it is about us, right? But I mean, all the conspiracy theories that are no longer conspiracy in every aspect of society show the wool that's been pulled over our eyes by the media, shows the dereliction of duty that they've embraced while the earth is changing, shifting under our feet in the West. Don't think it's over. Think it's just begun. That's not to say gold's going to infinity. I never say that. It's just to say that the floor isn't 2000 anymore. The floor isn't 3000 anymore. The floor might be 4000 now. And that means there's only ceilings to look at. So as the world catches up, don't buy into their hype. Keep anchored and don't doubt the path because no one has figured this out yet. All this news is happening in Asian hours now that we're doing, and it's not even being covered. I mean, even reputable analytical papers like the FT are writing about gold as a hedge for collateral, as a hedge for geopolitical risk. Yeah, thank you. But no one's doing any journalism because there are no journalists anymore. Anyway, so take comfort. You're still very ahead of the curve in terms of market reaction. Famous last words, but I just wanted to bring that up there. So when you're sitting down at dinner for the holidays, Christmas, New Year's, whatever you're doing, just finishing up with Hanukkah, just know that it's all changing, and hopefully you can help the people that you love weather the storm. This is personal for me because in the 70s, nobody helped my family and relatives weather the storm. And their businesses and families were destroyed. And I want to keep that to a minimum and try not to have that happen again. Anyway, moving on. News and analysis, Sunday discussion, the shutdown was shady for bullying behavior. That is an increasing cataloging of the shenanigans, we're using the word affectionately, that accompanied the shutdown with regards to gold open interest, with regards to revisions to open interest, with regards to what seemingly, as one of our founders pointed out to me yesterday, seemingly is consistent with exchanges shutting down. You revise the open interest after no one's looking anymore. Basically, you put the retraction on page 2. Anyway, it's a long piece and it's very lively discussion. Founders AM, some thoughts on tariffs, price targets, and Hartnett's monthly. Who is front-running tariffs and silver? A wildly popular story. And founders again, beware the Ides of January. All right, so we covered all that yesterday. The chat, those are informed people getting good information and sharing it with each other. You're encouraged to join that. Data today is GDP. Now, GDP is, I think it's delayed. So I don't know that it's as accurate as we want it to be, but nevertheless, it's something that will move markets. But remember, gold and silver don't change behavior because of data now. They are moments for exits and entries. Those are liquidity events. There's no data point that's going to change what's going on now. The only thing that will change everything we're talking about here is war or peace. And right now we have neither. So the course is here. One other thing. Do you not think the U.S. knows what's going on, that we're not paying attention to it? 10 years ago, you wouldn't dream of saying you were doing the things that they're doing, let alone do it. the world's pushed back and we're already bending. We know what's going on. We're probably assenting to it going on. Anyway. All right, so let's look at the markets today. It's hard to, now is the time when people come out of the woodwork and say, I have a target of this, I have a target of that, and that's fine. We don't usually have targets unless we have some sort of a quantified objective, like the measured move stuff we talk about, or the volatility signals. What we prefer to do is to look at what levels make us not want to be long. So, and I do a lot of work in that area, but this is a poly that we're going to pull up here. And I want to show you, it's a great place to start if you're doing your own analysis. Don't worry, I'm not a commission salesman. So on the left-hand side here, I'll pull up silver. The RSI is very helpful there as well, I think. There's silver's daily. Now, all you really care about, at least from this quick and dirty cursory pullback, is that green line there. Okay, so what's my target? I don't have a target. I get nervous if it trades 65.46 in silver. I get nervous if it penetrates it and settles below it. I get nervous if intraday we trade below 61.92. Now, these are big numbers, right? Well, that's because this is silver now. And it also gives you an idea that we're 3 days above a daily support level. Now, if you go to the weekly, and let's have that populate. Now you're looking at this saying, well, I'm using my concept. I'm comfortable with the market as long as it doesn't go below 51.86. That's not something that we trade with. Maybe you do. Maybe you're trading on a 10-year timeline. That's fine. But that's not trading. That's investing. So the weekly gives you no real comfort. The weekly says to you, wow, we're really ahead of ourselves here, kind of like a moving average. So maybe I don't want to be so macro, or it's just a sign that you should start taking profits. And I'm not telling you to do that because I'm not right now, which, is neither here nor there. You go to the monthly and you say, well, we could go all the way down to $41 and still be in trend. So you can't mess around with longer time frames. You either have to peel off longs, hedge, or say I'm in it for the long run. But say you're in it for the long run before it drops, not after, because that's lying to yourself. Moving to gold. Gold's a little bit better in terms of if you're looking for a level to not be bullish above or looking for a level to get nervous. And it's simple. It's right here, right? The level lines up with my level. So, gold's only been above this level on the daily for 2 days. So as long as we're above 43.55, give or take, you're comfortable. Now, that's simple, but it's not easy because when we get to 43.55, there's going to be sell stops. There's going to be people selling it as it gets back into it. And maybe a sell. Maybe a sell down to 4,200. It may be a sell down to 3,800. But that's where you have to have double layers. So, for example, if it settles below 43.55, I'm nervous. If it trades below 42.30, I'm out. Okay? That's basically how you look at these things. Let's take a look at the weekly. Yeah, the weekly is going to be just like the daily. Yeah, exactly. The monthly is probably well below the market. Yeah, there's the monthly. All right, so those are the markets. Let's take a look at platinum. Oh, by the way, the RSIs. People are talking about the RSI now in silver, and it is ridiculous, But I want to draw your attention to something. I think I can go all the way back here. Going all the way back to forever. Let's start with where it actually starts to trade. The monthly RSI, the weekly is a different story. The monthly RSI high was 97.46. It's crazy, right? Right now it's 89.59. So on a monthly basis, it's not overbought. I mean, it's overbought, don't get me wrong. It's just not at its all-time high. On a daily basis, this is interesting, it's barely touching overbought, 79.89. Is that a reason to be bullish? Yeah, maybe. On a daily basis, yeah. On a monthly basis, no. Okay, it's a reason to regress to the mean. So one of the things about technical analysis is it tells you what's going on. I'm going to tell you what drives a technical analysis. The RSI is very careful to not get overbought. The market on a monthly basis is overbought, but on a daily basis, you're having these massive moves, pullbacks, and settle downs. The market is being tamped down on the way up. Okay, I'm a buyer. I'm a broker, and I'm a buyer for a customer, and he gives me an order to buy 20,000 contracts. He doesn't want a shitty fill, so I'm going to buy 50, offer to sell 1,000, and then buy 50 again. So this is how a market is capped and traded. This is the behavior of any market that's being captured right now. Meaning, which is why I say it's not a short squeeze. It's a market that's moving up in volatile yet orderly fashion. When you see that ridiculousness, that's when the order is filled. Start thinking about VWAPs. Start thinking the world has an order to buy silver and gold. And when that order is filled, then you'll have your spike and long wick above. Just keep that in mind if you're trading short term. And I think that's it. That's enough, right? Final note, we got our first batch of hats made, and they're being shipped out right now. We'll put a link to that in the post, and well, hopefully they turn out all right. So we've been threatening to do that for a long time, but there it is. Have a great day, everyone.